Robschild, no investment advice. Welcome to the show where we view financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday, January 24th, 2025. Today's episode starts with bringing up the fact that we have light volume today. Although we're sort of knocking on that 6,100 level in the S&P 500, it's on light volume, which means the big money is waiting to see. It's waiting for something. I think it might be waiting for the FOMC meeting Wednesday. During this meeting, they may indicate to the market they might hike for the next meeting after that. We want to see what the FOMC does. They could pull off a surprise too. They don't always have to follow, they typically follow exactly what the Fed funds futures price is. And because they want orderly markets, they don't want to say, "Oh, we're going to cut next month for sure," and then not cut. They're not interested in surprising the markets. But we'll see what happens. I mean, the leading index being so strong that came out, maybe they'll put a hike on the table at least, maybe a month out, or maybe they'll say, no more cuts for the rest of 2025. We'll see. Wednesday could be a very big day. Also, Thursday we have GDP coming out for quarter four. Market Watch has it says Q1. I don't think that's right. I believe it's for quarter four. And the last GDP, I believe it was for quarter three, had 3.1% growth, which is a great number. Anything like 2% or higher is great. Once you get below 2%, that's like, recession or negative. That's when it's actually a recession. And so Thursday could be a huge report or nothing at all. January in general, many people, including myself, are expecting a lot more volatility in this month. We're almost at the end of January and knocking on all-time highs. Again, on light volume. Next week could be something or not. We'll see. And then Friday, the Fed, the favorite gauge for inflation, the PCE index comes out. On to the charts. We'll start with the S&P 500. As I said, we are fighting now at this 6,100 level. We opened higher than yesterday's close, and close exactly at this line. What was the close number? Let's take a look. 61.01 and 25 cents. So yeah, agreeing to disagree. This really is still a fighting level. This morning when I saw it open higher, I was like, whoa, really? We're just going to break higher from here? But the market pushed it right down to that exact level, 6,100. Considering the logarithmic chart connecting, again, 29 high to the .com high to 6,100 today, there has to be a battle here. There just has to. And yeah, the market is proving to have that right now. I've been talking about gold looking bullish, wanting to get up to this double top. It basically got there. It probably will still go up to the line, maybe even at least poke its head above it. That's what you usually see on a double top to try to squeeze out shorts, because you'll have people that are that have their stop loss exactly at the high end, so the market will push them out and then before driving lower, or will we gap higher and go all the way up to 3,000? It's hard to say. It partly depends on some of the data coming out next week. The FOMC and the GDP data coming out. I mean, some big reports coming out. So yeah, we'll see. You gotta take the info as it comes. Moving on, the dollar index. I've been talking about this being a bear flag, and it broke down to the downside as expected. No, most definitely not looking as bullish as it had been looking. TNX, the 10-year Treasury yield. I've talked about the past few days, this looking like a head and shoulders, and with today's motion going down, it's like playing out like clockwork. It's one of those charts that's like a kid is just sitting there with a crayon and being told, okay, now draw a head and shoulders top. Okay, mom. And we draw there and we go there, we go there, and then we go down. It's like following a little 5-year-old's drawing the way I see it. But as I continue to learn over and over again, don't count your chickens before they hatch. Oil, I said yesterday I expected a bounce. Does this count as a bounce? That's a little bounce. Tiny green candle as far as opening and closing goes. Again, with the 7 red candles, that's a time count, which a lot of traders use to predict a bounce. This is looking bearish as heck, though. Oil looking like it wants to continue lower, which makes sense in U.S. dollars. I mean, with again, part of the inauguration speech, literally, drill, baby, drill, he said those words. Yeah, my understanding, I overheard somebody talking about how in order for U.S. oil production to be profitable, the oil cost needs to stay above $53 a barrel. So, you know what's going to happen. It'll get down to $4 a barrel, so that, the American companies can't make money on it. And it's likely to play out that way, in my opinion. At least have a battle at the $54 level. Again, if we break this longer term trend line here, and there's a much longer term trend line that shows that the bottom, if we end up in a recession, especially if data comes out worse and worse and we get the data rolling on itself getting worse and worse, we could definitely head down to that $35 value, or rather price. Sometimes I say value and I mean price. Sorry about the error. Anyway, last chart, Bitcoin. I only bring it up because it's the biggest part of the bubble. If this pops, everything goes down with it. This is it's become the main leading indicator of almost like global liquidity at this point. So anyway, I usually do this at the beginning of the show. I forgot my daily reminders. I need to bring them up. I'm not going to read through them. If you want to hear me read through them, they're all still very valid and very important for serious investors. Watch Macro Update 110.25 in the ball, with the dominoes in the ball, to hear me read through that. And the crystal ball readings and Robschild portfolio has not changed significantly. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.